Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel trade system for free. Please type in the chat that you can hear me okay. I want to make sure that my audio is working. And be sure to post any questions you might have so I don't end the broadcast without answering all your questions. If you have any questions about options trading or about the Safe Wheel, post any of those questions if you have any. I want to make a special invitation for a free training I'm conducting later on this month. On this training, I'm going to reveal the trading plan that grew a small account by 85% in just 18 months. And I'll be giving away not only one, but 2 unique trading edges that you can leverage to reliably grow your account. And this will be the first time I'm revealing the inner workings of this proprietary trading system, so you don't want to miss out. And to get the early bird notification list, you can be one of the first people invited to this free training. Simply head to real-pl.com/edge. That's real-pl.com/edge. And I also put a link in the description. Okay. So hopefully you guys can hear me. I have not heard any, I don't see anything no one's posted a comment. Francis, how you doing? Can you hear me okay? Yes, you can hear me. Okay, good. Thank you. All right. So let's get into the earnings edge. I'm going to go ahead and bring my spreadsheet over here. Well, first, let me show you here. Here's my account value, right, on the earnings edge, 92.51. And I traded ADBE and made a profit of $632. You can see it right here. Thanks, Kenneth. All right, so with the earnings edge, last week I traded Adobe. It's $632. My record is 32.17.6. Now, since I updated the program, I think that was in October of last year, my record is 11.10.3. So, about a 50% win rate. Wins are a lot higher than losses. Average win 1,070, average loss $450. And you can see my results from 2022. Started with $5,000, ended with $81.77, made a 63% return. You compare that to the S&P. Over 2022, you can see that the S&P was down 19.48%. Now in 2023, the S&P and the earnings edge are kind of neck and neck here. But when you look at the overall totals from January 2022, the earnings edge is up 85%. Then the market's down about 9% since then, since January 2022. Okay, so earnings edge is doing great. All right, and next, the Premier Level 5. Let's talk about that. Okay, just get into the Premier Level 5 account. You can see I'm trading options on the ES. You can see my account value is 32,239. So let's bring over the spreadsheet again. The Premier Level 5. So my record is 18 wins, 4 losses, and 6 break-evens. I've got 4 open trades. And what was my 32,249? I'm sorry, 35. That's not 32, it's 35. 35,214. That's about where it is here. 35,214. You can see how we did in 2022. Did about 12.21% versus minus 6.39 comparing to the S&P. This is started on April 8th. So it wasn't the first of the year. It was April 8th. And you can see 2023, you can see we're up 4.6 versus 12.59. So underperforming in terms of returns when it comes to the PL5 in 2023. But when it comes to volatility, we're about probably 1/4 the volatility. So you can see overall 17% versus the S&P at 5.5. So outperforming the S&P 500 over this period, the period of inception. All right, let's get into what I think most people are here for, is the safe wheel. Let's take a look at the account value, because I am going to show you my account values. 6474. 6474 is the account value. 6474. And then the SPY, of course, is, let's see what that is. I already put that in there for today. SPY, yeah, 430.70. That's about what I have in there. So 430.56. We can put it in there. Okay, so with the safe wheel, the 21% were minus 19, so vastly outperformed the S&P. And then this year, whoops, 430.7. See, the returns are about half as good as the S&P, and the volatility is about half the volatility. So we're about even with the S&P this year so far with the safe wheel. You see overall around 30% return, where the S&P is down about 9.3% when we started total from January. When I first started showing this program and running it live, these are the numbers compared to the S&P, vastly outperforming the S&P there. Okay, so we've got a couple systems that are working well, outperforming the S&P, which is my goal. There's not a lot of traders that can outperform the S&P. If they could, I think they would be sharing their P&L. All right, let's take a look at what's going on with the account. Well, it looks like we're in Uber, and last week I was long 100 shares. I sold a covered call, and my stock got called away. So I no longer hold those 100 shares. And, I made some money off of that being long, but I still own the put hedge, the hedge. So the question is now, am I going to stay in Uber? Because if I do, I'm basically going to be starting over. So let's take a look at Uber. Uber is trading at $41. That's not between $20 and $40. So I am not going to trade Uber anymore, or maybe I will in the future, but I'm done with Uber because it's not fitting the criteria of being between $20 and $40, and I'm in a situation where I'm starting over. I'm also in a situation where my hedge is under 100 days, so I would get out of this hedge anyways. Well, I'm going to go ahead and just close this thing right now, so maybe I can get $34 for it. Maybe not. Maybe I can get 33. Okay, so I got $33 now. With Uber, how did we do with Uber? Or how did I do with Uber? So year to date, $440. And that's the only thing that I've traded. So that's my profit for the year then. All right. $440, probably minus commissions. Probably got commissions in there. All right. So that's pretty good. Uber was a little bit of a problem in the beginning. It didn't seem to make money, but this system will work with any, or should work with any stock that fits the criteria. It doesn't matter what stock it is, or fundamentals, or technical analysis. It doesn't matter. This is a totally just black and white system. It doesn't take into account any of those other kind of factors. So you don't have to worry about what the chart looks like, or whether Uber is what their quarter is going to look like, or anything like that. You don't worry about those kind of things. Okay, so I'm going to look at I have 6 filters that I use to pick, and you can see that I started building a list, and this is my list here of potential candidates. I think I built this list probably what 3 or 4 months ago, maybe 5 months ago. You could see that all of these stocks were between $20 and $40 when I built the list. Look at this AMC, obviously not between $20 and $40 anymore. APA. One thing with EPA, we can look at this. Would I go with EPA? So one thing I like to do when I go through and filter is I'll go to the trade tab here and I'll look at this, and kind of a guideline is I like to see this between 60 and 80. This would actually probably work here around 40. You know, the main question is, this is kind of a guide. If I look at the money, what are we at? 32.50, 32.50, or out of, and let's say I go out of the money to $32. Can I get at least 32 cents? And the answer is yes. So actually APA does qualify, even though it kind of technically doesn't meet that guideline of being between 60 and 100. It does qualify because I can get 1% of the premium. That one particular filter. The other filter, obviously between 20 and 40. Make sure that the put hedge strikes are available for it. So around 150, here's 130. I want to make sure that there's plenty of these available. If it went, let's say 20, then 25, and then 30, then 35, like these little, 2250, 2750, 3250s were not available, there wouldn't be enough there wouldn't be enough availability for my put hedge to trade this. But it is, this stock does qualify, EPA, to be traded. Of course, I don't want to overpay for my put hedge. I don't want to pay over $4, but that's not a problem. So I could use APA. I went through a few of these. Another one I like is X. You can see X. It looks like they might be coming into earnings, or it might be they might be doing earnings coming up here with the higher volatility compared to the others. So that might not work. I've got, and then I have DraftKings. That was another one that I liked. No, maybe it's not coming into earnings. So I like DraftKings. Looks good. Liquidity, pretty good. You know, like if I look at the ones around 40 cents, 38 to 40 cents, that's good, tight liquidity. So I can kind of pick between X, DraftKings, and APA. Either of those would work. I mean, it's just a question of what I want to do. Maybe I'm thinking I like DraftKings. It's not, I could have used either one of these, honestly. Either one of those three. A lot of these don't fit. Their pricing is okay, but a lot of them don't have enough volatility, like the IV. This one actually wouldn't be too bad. Let's take a look at this. See, the liquidity is not quite there. I'm 24 to 28. That's like a 4-cent gap. So liquidity is not as good. So I would eliminate that one because there's others that are better. And I could go with APA or DraftKings. I think I'm going to go with DraftKings. See, between 27 and 31, that's a little bit of a gap. Let's see APA again. 32, 34, 2023. You know, they're about the same. I'm gonna look at some of these comments here to see what you guys are thinking about picking a new stock. AI, Will says he likes AI. So you mean artificial intelligence type stocks, or is there actually a stock called AI? Okay. Let's see what AI looks like. Oh yeah, that's crazy. You can see that's got a lot of volatility. a little higher than I would like. It's possible, you know, but I'd rather stay a little bit. I don't want this thing to be, you know, in 2 days it's already above $40 kind of thing. I think I'm going to go with DraftKings. I'm going to go with DraftKings. Okay, so what am I going to do? The first thing is I'm going to buy my put hedge. So I want to be my put hedge. Where do I want that thing to be? Around 150 days. I have it written here. I'm looking over my rules, my flow chart here, and I want to be around 150 DTE on my put hedge, and I'm going to buy 3 of those. I have between $5,000 and $10,000, so I'm going to do 3 put hedges and do 1 wheel. I could go 130, 158. I'll go 158. So I want to be within 80%. So DraftKings at 25.37. 25.37 times 80%. 2029. So $20 is barely within there. 22.50. Even closer. I could pick between one of the 2 of those. I'm going to go with the $20. So I'm going to buy 3 of these. Looks like 141. I'm going to pay as little as possible. Mid price of 139. Maybe I can get it for 138. Nope, guess not. Okay, so let's pay a little more. It's not quite as liquid out here. And 150 DTD. Okay, rejected. Place it. Okay, so what did I get it for? I don't know. 130, 139. Okay, so now I have my put hedge established. I'm going to go ahead and run the regular wheel strategy. I'm going to do it in the nearest expiration cycle, the ones that expire in 4 days. I'm going to sell a put. And I'm going to sell a put out of the money, and I want to get at least 1% of the strike price. So it's trading at 25.33. So 25 would be out of the money, and 24.50 would be out of the money. So I'm going to go 24.50 because I can still get more than 24.50. You know, it's 29.31, and I'm a little further out of the money. I'm going to go ahead and sell this one. I could do the 25 if I wanted. Let's see, mid price is 30. I'm just going to do 1 of those. See if I can always try to get a little more. Okay, so I got $30 there. Now, I want to protect this put hedge, and how do I do that? I buy a long call for around $5 or $6. This one right here would probably go for $7. That's 28. I'll try to get it for 6. I might not get it. I'll pay $6. I won't pay 7. So I'll go long here. Might not fill. So I'm just gonna cancel that out and go 1 strike higher. Buy this one. Get it for $5. Probably. Yeah. Okay. So now we have on our put hedge. We have on our short put, and we're running the wheel strategy, collecting premium, collecting more premium than what our hedge costs. We're protected to the downside, and we're running the safe wheel. All right, good. Let's see if there's any questions in here. All right, let's see if there's any questions here. Let's see. You can hear me okay? Good. I appreciate that. I appreciate Will. Best of luck with your new exciting announcement. I appreciate that, Will. Appreciate that. Can you throw a link from your Twitter as well? Retweet. Yeah, you know what? That's a great idea. I'm going to write that down so I don't forget. Tweet. relink as well. Um, on 417 on Uber, since we started on Uber, hoping we move on now. Yep, we moved on. It's over. Uber, uh, yeah, up $417. Okay, great. You made money also. I think anyone that was dealing with Uber probably eventually made money this year with it. And the hedges are there 100 days in the vol. Yep. Tron, add DKNG to the list. Absolutely. I definitely considered them. They were one of the top 3 today. And Will said, pick a meme stock. Yeah, that would be fun, but sometimes those meme stocks, they get out of range. They get out of between 20 and 40 too quickly. And so it kind of causes me to have to start over. I just don't like starting over. I mean, I'll do it, but it's just, I like things that are easier. What is the symbol? I think it's DKNG, maybe, if that's your question. Glad we're out of Uber finally. Liking the new stock, even though it doesn't matter. Yeah, it's interesting to be out of Uber. She's been with it for what? For maybe 5 or 6 months. Let's see, Daniel. I have a profitable long in the money calls as we approach the FOMC. Do you have any suggestions for a hedge? Okay, so as we approach the FOMC, so that means that the binary event's coming up. And that means that you are thinking about making a decision based on that binary event. And it sounds like you're thinking of making a directional decision based on a binary event. That's where I can't really help you because I don't make directional decisions. I do make decisions based on binary events, but I don't make directional decisions. So it's hard for me to help people when they are asking about a directional approach to the market because I don't know which way the market's going to go. I don't know what's going to happen with the FOMC, whether the market's going to go up or down or whether it's not going to move at all. I don't know. And, nobody knows. So it's hard to make directional plays in general. Kenneth, I'm new to your live stream. You may have covered this, but can you do a video on the mechanics and signals of getting out of positions? Yes, but I guess it depends on what system you're talking about. So the trading systems that I deal with, they're very mechanical, and you just saw me get out of Uber. And why did I get out of Uber right now? I mean, what was my decision? Why did I make the decision to do it now? Well, because I trade my system every Monday morning at 7:15 a.m. I mean, that's why I did it. Now, if you have other reasons for getting in and out of positions, if they're directional decisions, that's where I really can't help you because I don't make decisions based on direction. So my decisions are more based on timing, like it's Monday morning kind of thing, or my earnings edge. Earnings are coming up, so there's a binary event coming up, but it's not a directional decision. I hope that helps. I mean, maybe you can get a little more detailed on that, Kenneth. Will, I just think a meme stock has the potential of garnering more attention and you prove more how the underlying doesn't exist. I think you do have a great point, and maybe I'll take that into consideration and do it next time, just for fun. I mean, it's not going to hurt to do that. It might break a rule in terms of how much I'm going to pay for that put hedge. I don't like to pay over like $4 if I don't have to. But other than that, yeah, I mean, I'm sure it'll work fine with a meme stock. Will, are you making a separate video on your new announcement today? A separate video? No. I'm going to be doing the training. It'll be a week from Thursday at 9 a.m. Pacific time. And I'll just be making announcements until then. Does anyone else have this Norton thing? This is just keeps popping up no matter what. Okay. I recently discovered you've been making shorts, and I have to catch up on those. Those could possibly be linked on Twitter as well. Yes, thank you. Yeah, the shorts. I'm currently running a few shorts. I like to try. I want to try something different to try to grow my channel a little bit. It doesn't seem to be doing what my expectations were higher than the results that I'm getting out of them. But I was looking to just kind of post something every single day to kind of help with the algorithm. But it doesn't seem to be having a much of an impact. Not the impact that I expected with those shorts. Kenneth, makes sense. Okay, great. I'm glad I was able to answer your question. Daniel, non-directional. I'm already long. Just want to hedge off my gains going in without closing the position. Okay. Well, you can do a caller. You'll cap your upside, so you'll sell calls, right? And you use that money to finance and buy a put. So that's one way to do it, where it's kind of a cost-effective way that if you want to hedge off your position, and you're going to give up your upside, but you're also not really going to pay much for your downside. So you could sell a call. Let's look at DraftKings maybe. Let's say I was long DraftKings. So I could technically, let's say I was in it at 25 bucks, and I could sell the $26 call, right? So that means if it goes beyond $26, I still make some money, make $1. And I sell it, I get 32 cents, and then I can turn around and maybe buy the 24.50 put. And so I'm covered below 24.50. So that's one way to do it. You just finance buying a put by selling a call. So that's one idea. If you want to hedge yourself off, you're just going to cap your upside risk. So you can do that rather than just straight up buying a put that may or may not come through for you. Why not just finance it by selling a call against it? So, and you want to make sure this is for every 100 shares. So if you have 100 shares, you do one of these. If you have 200 shares, you do two, that kind of thing. Yeah, is the new announcement about the mastermind? No, it's about the earnings edge. Tron, doesn't the system have an upper volatility rule that meme stocks would most likely violate? Yes. Yes, and really the reason behind that is so you're not out of that $20 to $40 range in a few days. I mean, that's really the reason for avoiding the meme stocks. I mean, that's not really a big deal, honestly. It just makes it easier to stay with one stock longer, which makes the system easier to maintain. Some guy, I have the Norton thing, really annoying. I know, isn't it? My Norton subscription is due in 7 days. Hence the constant messages. Yep, exactly. Is there any way I can do it without capping the upside? Well, yeah, you can pay for a put. I mean, you're just straight up going to pay for it. Or you can also do a put a debit spread where you can buy the 24.50 and then maybe sell the 23.50 against it to kind of finance it a little bit. But then if it goes below 23.50, you're at risk. There's always a give and take, right? Or you can just buy this 24.50 straight out, and you're going to pay for that. And most likely you're not going to get, you might have to sell it later for a lot less, or it might cover your position for you and you'll be happy. Hang in there, Carl. One day there'll be a spark and your channel will blow up. In the meantime, hopefully this is the time investment that pays off with long-term passive income you'll make. Yep. I appreciate that, Will. Yes. I have a business. It's a good business. It's growing. I can't complain at all. My goal initially is for my business to actually make more money than what I do in trading, and So 2022, I made more money trading than my business. And then, the 2019, 2020, 2021, 2022, all four of those years since I've started my business, I've made more money trading than I did with my business. But I think 2023 is not going to be the case. I think that I'm going to accomplish my goal of making more with my business than actually that I make trading. So I'm pretty sure that's going to happen this year. So, business is fun. It's a challenge and I enjoy it. I enjoy the challenge. All right. So in parting, I do want to also just remind everyone, in case you guys missed it. Let's see here. There's another thing here. Jerry, I paid for the Earnings Edge course and just want to let everyone know that it's well worth the money and effort of learning it. Thanks, Jerry. Appreciate that. John, can I use your 2660 system for things, directional trading thing like Forex, crypto, and stocks? Well, the 2060 system is not directional. And also, I would not use it for anything outside of the SPX because that's the way I back tested it. So I wouldn't use it with other underlyings other than the back test results that I got are based on that underlying. And also, when people want to hedge and the market is crashing and things like that occur, they tend to go to the SPX, and that kind of plays a factor in the system. And also, when you're trading the 2060, only trade one tranche. It's just training. Don't put more than one tranche in. It's not there for you to try to make money. It's there for you to learn how I trade, how to trade options, the way that I trade them, and eventually graduate up into the Premier Level 5. The Premier Level 5 makes money. The 2060 doesn't necessarily make money. It makes money sometimes. Sometimes it loses money. It's more of a break-even kind of thing. It was making money earlier on, but now it's more of a break-even. But it's more of a learning experience. Some guy, I like the fact that you make money by trading more than selling courses. Definitely differentiates you from the other educators. Absolutely. That's a true statement. And then some guy to ask Jerry to share your P&L. LOL. Okay. I want to make this special announcement again. I have a special invitation for a free training I'm conducting later this month. And on this training, I'm going to reveal the trading plan that grew my account by 85% in just 18 months. And it'll also be giving away not one, but two unique trading edges that you can leverage to reliably grow your account. That's what I've done. And this will be the first time I'm revealing the inner workings of this proprietary trading system, so you don't want to miss out. To get the early bird notification list and be one of the first people invited to this free training, simply head to real-pl.com/edge or see the link in the description. Always in parting, I always like to say, if the P&L is not real, what else are they trying to conceal? Okay, I'll be back next week. Thanks, guys.